The backdrop, of course, India's infrastructure story gains momentum. Adani Ports is emerging as a key player in that transformation because Cantor Fitzgerald believes so, and they've initiated coverage on Adani Ports with an overweight rating. Mahima Johnson will tell us more about that. Mahima.
Right, so as you rightly mentioned, Cantor Fitzgerald has initiated overweight with a target price of 1780 for Adani Ports, which is almost a 28% upside from its current market price. Now, the key drivers behind the rating includes forecast of mid-teens growth in revenue, EBITDA, as well as cash flow by 2029. They're saying that the target price is based on valuation of 16 times forward 27 estimates EV to EBITDA and a DCF of cash flow through FY36. They expect potential special dividend by 2027, and this will be on the back of strong free cash flow as well as low net leverage. Revenue, EBITDA and operating cash flow have grown at a 20% CAGR over the past 5 years is something that they're liking. Business outlook, they're saying that company is well positioned to benefit from India's underdeveloped trade infrastructure and aims to double port capacity by 1 billion million metric ton by 2030, supported by government policies. Logistics volumes expected to grow by 5 times by FY29 is something that they're penciling in. And lastly, marine services targeted to triple revenues by 2027. FY2027 is what they're saying. So this is the overall view as to what makes them bullish on Adani Ports.
Okay, but well, that's not all, right? Because we are also awaiting some key results. Mahima, and Asian Paints is that big consumer company in focus.
Right, so basically it's set to host its earnings tomorrow, and it could come anywhere, any time in the market hours. A few expectations where it's going to be yet another disappointing quarter for them because demand has not picked up, and that's something that's going to hurt overall its earnings. Revenue is expected to be flat at the 8,988 odd crores, and revenue also may see a fall of around 2% to 1657 crores. Margins may fall slightly to that 18.4% mark, but still within the guided range of around 18 to 20 odd percent. Net profit may see a fall of around 5 odd percent. So muted set of numbers overall. In terms of what to expect, well, urban demand to remain under pressure, but the commentary is going to be crucial because we'll have to see whether they continue to say that second half will be better for painting industry or not. Secondly, margins will be slightly under pressure because of inflation. Price hikes will, however, try to offset some of this inflationary pressure. Rising competition from peers, of course, that's been the story for the painting sector, and commentary on that will also be important, especially in the tier 1 areas where Asian Paints has larger dominance. It's expected to underperform peers because of its larger presence in tier 1 and urban demand not picking up. Key monitorables, something that I'll be watching out for as to how they'll deploy the money that they've received from the stake sale in AkzoNobel, and of course demand outlook and the kind of competition and price hike impact. So this is the overall view of what you can expect from Asian Paints earnings.
So Asian Paints earnings, IndusInd Bank earnings also is something that we need to watch out for.